So what is the pound Canadian dollar doing? We were looking at a 680 pip move to the upside, and what's happened? The market's dipped back down south. Now we did say that there was two trading opportunities, right? You trade on the 1 hour time frame, which would have been tighter stops, and then trading on a larger time frame that would have been stopped below the daily lows. And the market has been bearish. Now, I sat down and had lunch with a very good friend and a trader, and I said that we were looking for a 680 pip rally to the upside. Guess what he said? He said he's going to go ahead and put 80% of his capital in that trade and look to make profits, because who doesn't want to make 680 pips on the trade? Well, traders, I sat down with Mr. T and I asked him, what do you think about that? I pity the fool. Well, I guess we got the answer to that, right? We pity the fool. Listen here, traders, even though the markets are going to go ahead and rally, we have to realize there's always that chance that the market go against us. And if the market could go against us, we're not going to put 80% of our capital in a trade. Now listen here, we're going to go ahead and talk about not only the pound Canadian, we're also going to go ahead and talk about the Euro Aussie dollar, right? Those are our predictions that we have currently right now that are running and are still active, just so you know. We'll talk all about that and, of course, what Brexit did to the market. And also, we're going to go talk about a very, very cool indicator that's going to help you find trend and make a lot of pips in the market. We'll speak about that right after this. Alright, traders, well, welcome back, and yes, we're going to be talking about the pound Canadian dollar, and yes, the 1 hour time frame trade that we looked at did not work out. It is what it is. We now go ahead and look at the other opportunity. Remember, the other opportunity was the daily time frame. Will that be still in play? We'll take a look at the technicals and see exactly what that plays out to be. Also, the Euro Aussie dollar. The Euro Aussie dollar also, we had a huge trading opportunity. We spoke about 2,700 pip opportunity. We said that the market has not really given much yet. I think we picked up about 400 already, but there's still plenty to go because the market is not broken out of that wedge. Now, I'm also going to give you a very easy and simple indicator that you can get anywhere. And by the way, thank you, Patricia, for your comments because it's been really helpful. Traders, if you please do me a favor, go ahead and make sure that anywhere inside this channel right here, go ahead and comment on the videos, because your information helps me to make some videos on what you're struggling with, and so we're helping each other. Now, also, very importantly, all right, this indicator is not the only thing that you need as a trader. It's clear, traders, if it was just one indicator, if you only use just one indicator, and one indicator made you millions and millions of dollars, why would you want to share it with anyone else? You see, the thing is this. The indicators are just a guideline as to where the markets are going. I'll show you exactly what I'm using and what's helped me as well to define trends and entry points and all that good stuff. So let's go ahead and take a look at the charts right now. Now, I'm going to open up the Euro Aussie dollar. I'm going to talk about what we spoke about, the prediction. The prediction's coming off the weekly time frame. Let's go ahead and refresh everyone's memory as to what we're looking for, right? We're looking for price to go ahead and break out of this and start heading back down south, right? That's the idea. Let me drag this to the side. Go ahead and pull this out right here. So we're looking for price to go ahead and start working its way back down south, but we've got to break out of that support. And as long as the support holds, traders, as long as that support holds, we're not going anywhere, right? So we want to see that support broken, and then we can go ahead and look for the opportunity. Now, we're not there yet, and the market's retracing slightly up. You can see right here, we may see a retracement, and then the market's going to move back down south. Now, where's the greatest opportunity? The greatest opportunity is not in between here. The greatest opportunity is if the market breaks through. Now, I'm not saying that traders cannot make money going up and down inside this wedge. I'm just saying that the biggest opportunity, the greatest opportunity is when the market starts dipping. Because traders, if you know exactly where the market is and where the market's trading, you can go ahead and continue to follow that trend. So if the market is breaking through that support right here, all you've got to do is to continue to sell all the way down on any system you have, and you will make some money. Now, what we're looking for right here is the breakout. Now, if I have to go ahead and take a look at the charts, now I'm going to show you what I have right here. I've got the chart set up here on the daily, and the daily says to me right here that I should not be looking to sell at all. In fact, we've gone ahead and broken up north, and it's actually telling me to buy. So we've actually got a buy signal on the euro Aussie dollar, not a sell signal, a buy signal. All right. So that's what we've got right now. Now that buy signal could take us just to the upside right here on a retracement, and then go ahead and work its way back down south. Now, if we are systematic traders, we spoke about it in the last video. If you didn't watch the last video, then wait until the end of this video, and I'll go ahead and make sure that that video is available for you right at the end of this video. I'll go ahead and make sure it's posted, so you can go ahead and just click on that. Now, we spoke about staying systematic, right? Becoming a systematical trader, which means trading just based on rules and sticking to the rules like a system would if it picked up a buy or sell opportunity. Now, if we take a look over here, we have a buy opportunity here. So traders should be looking to buy long. Now, this could be just a short-term trade opportunity. Absolutely, right? We could get in on this with a short-term opportunity. Let's just take a look and see if we get in on this trade on a buy, and we did close out with a bullish candle. I'm going to go to the 1 hour. I'm going to take a look at the 1 hour, and yes, you can see the 1 hour is also slightly above the wavy tunnel as well as the signal line. So we definitely have buyers in the market right here. The 1 hour's in line. The 8 hours even telling us that we should be looking to buy. So everything's saying let's buy. Now, if we go ahead and buy in on this, where's the safest place to go ahead and put our stop loss? Well, traders, I'm going to go ahead and go through all those details with you right now. The safest place to put your stop loss would be behind this level right here. So this is where you can place your stop. So this is your entry, and this will be your stop loss right here. All right. You can see it's behind the U-turn. Now we had a nice little retracement. You can see a nice little bullish engulfing candle right here. Everything's telling us keep buying this market going long. In fact, if you look over here, we had the market close not once but twice above that signal line, which is the blue line. So traders, right now, a good time to go ahead and buy. Where's the stop loss? Well, the stop loss is going to be placed below the low. So let's go ahead and take a look and see the low. The low is behind this level right here. I'm going to go ahead and measure it out. And by the way, if you want a tighter stop, you can put it behind this level. That's 90 pips. If you want it behind this level, which is a much safer stop loss because it's below the wavy tunnel, that's 213. Now the question here is, how much profit do we have to the upside? Well, there may not be as much profit to the upside just because of the way the market's setting up, right? There may be if you go back to the weekly time frame right here, and you go ahead and measure up the weekly here, and you see if this is where price is going, we could go up about 434 pips. Now that's expanding right to the top. Now if it doesn't go up there and it starts coming back down south, right? Then of course what I mean is this. Let me go ahead and show you on the chart. So if the market does this and then starts coming back down south, we might only get 50% of what our stop loss is, or in fact maybe 100% of our stop loss. So if our stop loss is, they say 200 pips, we might only go up 400 pips, and then the market go down. No, in fact that's not going to happen. My bad. Hold on. It's going to go up 200 pips. There we go. 100% of it. So it'll go 200 pips, start coming back down. Now that's still okay for you to go ahead and move your stop to break even and run at a break even trade. So whatever you're risking, you're gaining in profit, and then you put your stop at break even. And if it does break up and go higher, then you get in a 1 to 2 risk reward ratio, and that's okay. All right. Now, if you put your stop a little tighter, you may be able to get better opportunities. Now, if I look over here on the daily time frame, I'm going to get the indicators off here. But if you look over here on the daily time frame, you can see that if your stop loss is down here, that's about a 90 to 100 pip stop right here, 100 to 90 pip stop. And if you put your stop there, it's going to be a lot easier for us to get 100 pips out of this move. Maybe get a dip, another 100 pips. So you could probably get more than a 1 to 2 risk reward ratio, maybe a 1 to 3 before it even gets to the top. So you may be in a better position to put in tighter stop, because honestly, traders, if price does come back down here, maybe we won't want to be out of the trade in any case. Well, the fact of the matter is, traders, you make a decision how you want to manage this trade. Here would be a safe place. There would be more aggressive, but giving you better risk-reward ratio in your trade. All right, so entry point right now, either 90 pip stop, 100 pip stop, or 200 pip stop, depending, of course, how you want to play it out. Now, this is the Euro Aussie dollar. Now, we spoke about a 2,700 pip to the downside. So you're probably saying, well, big dog, whoa, what are you saying? Are you saying we're going to be buying long now? Well, I'm saying that yes, there's an opportunity for the market to go back up just in a retracement move before it comes back down. Because traders, honestly, as a system trader, everything is confirming that the bull's in control. The daily's bullish, the 8 hours bullish, the weekly's now bullish off that support, and even the 1 hour's gone bullish. And you can see right here, here's the 1 hour opportunities. 1 hour said buy over here. The 1 hour's now gone back and test that support, and it's going to start working its way back up. So what are you going to look for as target? Well, as we're looking on the daily time frame, that stop loss, that 90 pip stop loss and 90 to 100 pip stop loss would be right about here. So which means if this is going to be wave 1 and this is going to be wave 2 up here at the top, then we could possibly look for the market to go ahead and rally up to the third wave. Now look at the target. Third wave on the target on this, and I can go ahead and expand this a little bit out to the top here. We're looking at a third wave move all the way up here to around about 165.50. So by long, let's take a look at our profit target on this. If we're looking for profit on this, we're going to gain about 280 pips with exactly about, well, actually looks like a little bit tighter than that. We're looking at approximately 70 pip stop, 75 pip stop. So it's a little bit more aggressive, but it's going to get you a 70, let's call it a 70 pip stop for a 280 pip gain. All right. Is it worth the risk? Absolutely. All right. Absolutely. Let's go ahead and pull out that big ass calculator that I've had before. And you can see right here, if I take 70 pips and I divide that by the 280, we're getting, oh, my bad. Sorry. Hang on. I've taken 280 divided by 70, there we go, and that's giving me a 1-to-4 risk-reward ratio. All right, 1-to-4 risk-reward ratio, that's what I want. All right, good risk-reward ratio like that. So this is how we're going to go ahead and do it. We're going to go ahead and enter, oh, let me get that out of the way. We're going to go ahead and enter with a buy, and let's see here. We're going to go ahead and place an order. All right, now I'm going to pull up that big-ass calculator again. I'm going to go ahead and work out my equity management. And let's do this. Let's do this over again. How many lot sizes? What currency is the Euro Aussie? I'm just going to go with 10 as a divided by, let's go 70 pip stop. Divide that by, I'm just going to go with 10. And we're looking at 7.14. All right, 7.14. So I'm going to go ahead and put this in. Oh, and I'm going to have to change this up. So let's do that quickly here. Change the trading accounts. So we're going to go ahead and place. And by the way, traders, I just want to make sure that everyone understands. You have to make sure that when you're doing any sort of position, when you're placing any sort of trades or getting into the market with your trading account, make absolutely certain that you do have good equity management on all your trades, because if you don't have good equity management on your trades, you're going to run into some problems. All right, you don't. There is no, just like that other guy, there is no holy grail trade. All right, there is no holy grail trade. You have to make sure that every trade is treated like this one. If it works, if it does not work in your favor, you can come back again and trade another day. Very important that you do that. So every trade should be treated that way. I never ever want to hear anyone saying, you know what, I had so much money on that trade, or you know what, I put in, I lost a lot of money on that trade. You know, I get a lot of that. I lost a lot of money on that trade, and I'm like, why are you losing so much money? Why are you doing that? It's because they're over leveraging on their trades. All right, so let's go ahead and put this order in. So we said it's going to be about a 70 pip stop, and so let me see here. Let's take that out the way. All right. And we're going to go ahead and put the order. All right, we said it's going to be, let's pull that down. Let's change the lot size a little bit. We're going to make that now 714. Okay, and then we're going to go move it down a little bit. It's going to be a buy. We're going to put in a stop and a limit. We're going to put that now in a, it said 70 pip stop. And then we're going to go ahead and put our target down here. 280 pips. All right, 280 pips. And we're going to go ahead and place that order. Okay. There it is. Okay, so we're in. So we've got a stop down now. Now you can see my stop not quite at the same place. Maybe I should just push that stop a little further down south. There it is. All right, so move the stop a little bit down right here. So maybe a 70 5 pip stop, putting the stop in the right place. You're looking at your target at the right place there. That's the trade that we're going to go ahead and follow through with it. Now, remember, traders, this is the Euro Aussie dollar. We are looking for a move to the downside, right? Nothing has changed with regards to that. We're looking for the market to go ahead and confirm that. But the one thing I need to make sure about is that everyone understands that. I'm going to just go ahead and put that back there. Everyone understands that that is just in the short term. If I go back to the lower time frame, let me go ahead and pop the lower time frame open here. And we drag that indicator back to where it needs to be. Let me go ahead and put it over here on the side. Oh, it looks like it's hanging out here. There it is. Okay, fine. There we go. All right, so what I'm going to do is this. I'm going to go ahead and monitor the daily time frame. If I get any bearish candle on the daily and I'm not being stopped out, I may go ahead and reverse this position, all right? Or maybe go ahead and stand aside. Right now, it certainly tells me that I should be looking to buy on Euro Aussie dollar. So I will be a buyer on the Euro Aussie dollar. Now, let's go ahead and take a look at the pound. All right, we spoke about the pound Canadian dollar. Let's go to the daily time frame. Now, traders, remember I said to you, if we are in on the daily time frame, if we have got our stop below the low of the daily, which is right here, okay? If we've got our stop below that level right here, if I close out with a bearish candlestick formation right here, traders, listen here, that means that the bulls are losing control right now. The bulls are losing control right now, okay? Which means that the bears are taking control, which means that any sort of buy that I have now on the pound Canadian dollar, I got to start cutting my losses. It is what it is. Traders, I've got to start cutting my losses because I am not going to trade against the trend. Now, if you actually take a look at contrarian sentiment, what is contrarian sentiment? Contrarian sentiment is how many net longs and net shorts you have with any sort of broker. And a lot of the brokers right now, they reveal how much traders are long and short, or net long, net short. And currently right now, if you look at the pounds, there's a lot of net longs on the pounds with retail traders. What does that mean? That means that where the herd is not necessarily where the market's going to go. And so currently right now, there's a very big chance that pound is going to continue to fall short. I don't want to be on the wrong side of that trend. There's a lot of traders that might be. I don't want to be on the wrong side of the trade. So guess what? Going back to the pound Canadian right here, based on this, and again, traders, I'm going to do the same thing. I'm going to go ahead and place my stop. Now, I'm not saying that the pound Canadian is off the table for the long. I'm just saying for the interim, for the short term right now, all right, I'm going to continue to monitor where the market's momentum's at right now. Right now, the daily says I'm bearish, and if I go to the 1 hour, we are well below the market at the moment right now. I'm going to clear up the charts, and you can see right here, I am currently bearish. Now, if the market's going to set up a wave 1, 2, 3, and then a little 4 right here is a test right here. This could be 5 right here. Now, this is the deal that I'm maybe a little bit cautious on pound Canadian, because pound Canadian could start moving back up north. All right, we just got some news out this morning on Brexit, and if you didn't know already, at the moment right now, not very good news. All right, not very good news. They are talking about the Brexit deal falling apart, or at least the talks in Brussels are falling apart. They have even started looking at other options, like if the new prime minister comes into power, if he manages to sway a no deal at all, and the UK move completely away from Brexit, this could absolutely, and now when I say that, what we're talking about is a second referendum or a withdrawing of the 50 or the Article 50, right? Which means that the euro pound could fall all the way back towards 0.8300. 0.8300. We could see the pound JPY, we could see that rallying back to 141. All right, 141. At the moment right now, it's trading at 130. We could see that the pound US dollar could climb all the way to 140. All right, this is a complete full-scale recovery to the levels that we had at pre-Brexit in June 2016. It could happen, all right? But at the moment right now, while things are still out there and still being discussed, let's just make sure that we checking out where the momentum's at. So I'm not discounting the fact that pound CAD can possibly still move north. I'm saying let's stick with the momentum right now. Now, what I do want to do is this. I want to be a little bit more cautious on this, and I'm going to tell you what I'm talking about. If this is, as I pointed out, if this is going to be wave 1, 2, 3, 4, and 5 down here, then I'm expecting price to maybe move back up again. So I'm going to stand aside on pound Canadian for right now. And I'm also going to show you why. Because there was Patricia posted some information about, Gary, you know, this is all great information, but I don't have the tools you have. I don't have these indicators and all this good stuff that you have, particularly the wave tunnel, the writing of the waves, and all the good stuff. I don't have that. How can we identify what you see in the market with some other type of tool? Well, this is the deal. This has come back to, if you haven't played around with this tool before, this indicator before, maybe you will now. But take a look over here as I go ahead and show you my chart. I'm going to go ahead and flip it over to different workspace right here. And I'm going to go to, let's see here. I'm going to go ahead and flip it over to this one right here. I think it's this one. Positive is this one. And yes, I am. I'm right. Okay, there we go. So take a look right here. Now I'm going to flip over to the, let's go ahead and flip over to the daily. So if you take a look at the daily right here, the daily is still bearish on Euro Aussie dollar. How do I know it's bearish? Well, traders, it's currently trading below this, what we call the Ichimoku cloud. The Ichimoku cloud in Japanese is like, it says at a glance. So at a glance, you can identify what the trend is. I love this indicator. I think this is the best thing since sliced cheese, because if you go ahead and compress the chart right here, you can almost see when markets are sideways, when it's time to go ahead and trend. Take a look right here. If I show you right here, you can see right about here, which is back in the early start of 2017, you can see how the market broke through there, how it trended. We had a slight interruption to the trend, then it went back up again. You can see how much profit there was, slight interruption to the trend, then the market went trading up there again, another interruption, a larger interruption to the trend, and then since then, as you can see right here, the market has been pretty much sideways. Look there, okay? It's been wedging up. And that's what we've been looking at right here. This is the wedge that we're looking at right here. We're looking for the market to break. And you can see how many times it's breaks above, breaks below, breaks above, breaks below. It's just been very, very choppy. When you see this type of thing, just go ahead and trade some short-term profits. Now, what we've done now by buying the Euro Aussie dollar, it's a short-term opportunity, but this is why I'm cautious on this. I'm cautious on this because as soon as we start trading back below, okay, with a bearish candle, and I like to use these bearish Hikinoshi candles, but if you look at the candle and you look to trade the candle's bearish move, at the moment right now we've got bullish candle right here, so I'm expecting some short-term rally. As soon as we get any sort of indication right here that the market's going to go head back down south, that's it. We're out. We're looking to sell because this is going to continue to move down south. Now, you can see on the 1 hour time frame, the 1 hour time frame right here is just recently broken through the Ichimoku cloud. All right, take a look there. So we've just broken through. So if this is going to be that third wave move that we're anticipating, then this is what it is. This is the second wave right here. We're looking for that third wave move. This is why buying here, stop losses down. Well, I've got it all the way down here. But stop losses down there, looking for the market to go ahead and rally, okay, is good sense. Makes good sense to why we're going to do that. And just in the short term. So looking for short-term opportunity is fine for right now. I'm not looking for any long-term opportunity because I'm still anticipating the breakout of the Euro Aussie to the downside. Now, let's go to pound Canadian. And I'm going to go to the daily time frame on that. Take a look at the daily. Now, pound Canadian, what did we say? We're looking for a rally to the upside, right? Rally to the upside. Traders, we're in a no trade zone right now. You see, when the market gets inside this cloud right here, what it's telling us is this is the neutral zone. This is where traders don't know where the markets are really going. They're saying, let's go ahead and sit aside and wait. But when you get these bearish candles right here, then maybe the market's going to try and come back to the support level of that cloud. So we're going to go ahead and stand aside. But if I get a bullish candle on this pound Canadian, all right, if I get a bullish candle setting up on this, I may go ahead and look to buy long. Right now, I'm going to stand aside. Let's go take a look at the 1 hour. The 1 hour's already gone south. See there? I'm going to go ahead and put them side by side so you can see. So the 1 hour already has gone south, and it went south right here at the top. So there was the sellers right here. That's where the smart money was, and the market's gone ahead and dipped down. So we're looking at this and saying, okay, well, we're in the no trade zone right now. Let's wait and see if the market can break through this tunnel, this cloud. And if it does break through the cloud to the downside, then we can go ahead and look to sell it. But up until that point, we are just not going to do anything right now. All right? Because if things change in the Brexit situation, if things change over the next few days to the next week, then this could be a recovery, and a very quick recovery as it starts breaking back up north. And I don't want to go ahead and trade in the neutral zone until I get the confirmation. So this is the reason why I'm going to stand aside. But also, as I indicated already on the 1 hour time frame, I indicated that we have completed, and let me see if I can see it on this chart with this price type. Let's see. Yeah, yes, I can. And I'm going to go ahead and pull in a smart tool here, and I'm going to drill it down from there to there. And that's what I'm looking at right here. You see this price action, right? So this is what I'm seeing right here. I'm seeing that we have wave 1, wave 2, wave 3, wave 4 right here, and this is wave 5. So I'm expecting price to come back up again before heading back down south. And this could be not just price moving up, this could be an absolute reversal of the pound Canadian going long. So I'll be looking to see if pound breaks through this Ichimoku cloud and starts going long, I may be looking to go ahead and buy long. In fact, if I go to the daily time frame, and I put up the daily time frame right here, and I see that the daily time frame closes out with a bullish candle above the cloud, like something like this. If I have that happening right here, all right, then I'm going to be also a buyer in the market. I'm expecting price to then go ahead and continue its rally to the upside. So there's a lot of opportunity still left on the pound Canadian, but for right now, with everything that's happened with Brexit right now, best thing for us to do is to stand aside. Right? I think it's going to be a little bit more choppy towards this week. I don't think that all the news is out. There's still talks happening right now. We do have this week as well. If you go to the calendar and take a look at the calendar, we have the ECB monetary policy meeting accounts. It's not really around Brexit, but we do have this taking place here. And you see, yeah, this is the European Council that's taking place. And let's see here. It's what are they going to be talking about? Let's just see if there's anything related to the European. Well, it's about the Eurozone, so there's going to be absolutely some sort of conversation going around to what's going to happen with Brexit as well. But let me see here. If I go and move to the next week, taking a look at next week right here, I don't see anything in next week that is pound related. So this means traders, and I warned you, I said to you guys, watch out for this week. It's a quiet week with news, and I said any sort of flash news, like we've just had right here, and there it is there. Take a look here. Oh, we're getting some news. We are getting some news. U.S. imposes visa bans on China. Oh my goodness, are you kidding me? We've got here, let's see here. Powell says Fed. Okay, that's on something else. Where is the data? Let's see. All right, there it is. There. This is the news that came out right here. So p.m., which means Prime Minister spoke to Merkel at 8 a.m. this morning, and sources say that there could only be a deal if the Northern Ireland stays in the customs union, and that is probably going to be unlikely, which makes it a harder deal for the Brexit deal at the moment right now. And like I said, unless we have the new Prime Minister, all right, unless we have a new Prime Minister that comes out and says, oh, you know what, I'm gonna go ahead and see if we can take the steps to avoid Brexit completely and just completely get out of this Brexit situation. That could absolutely go ahead and move the market drastically. In fact, like I said, we could possibly get to the high, or at least the prices that we were at pre-Brexit on most of the pound crosses. So that's what we're setting up right now. Very interesting market, very interesting setup. But for those that were looking for an indicator or some sort of tool to use during their technical analysis to be able to define whether or not the market is bullish or bearish, then looking at this chart right now and looking at the Kuma, which is the Ichimoku cloud, this is absolutely a tool that can help you get yourself in the right direction. Because traders, at the end of the day, we want to make sure that we are in the right direction, because that is ultimately what's going to take you in the right direction. But not only in the right direction, but it will offer you opportunities. So if you got any sort of indicator, right, or not indicator, but maybe an EA, and you're trying to define trend direction, then this tool right here will absolutely be worth taking a look at. This indicator has helped me tremendously to be able to identify trend direction, especially in the early stages of my trading, where finding trends was really difficult. This indicator, the Ichimoku cloud, own it. It could be very, very useful. All right, traders, well, that's it from me. We'll see what happens through the rest of the week and how the Pound Canadian and the Euro Canadian, the Euro Aussie, we'll go ahead and take a look at how they both feature in the course of this week. And if any news comes out, we'll see how the market deals with the news. This is FX Big Dog, and I'm wishing you peace and joy and successful trading for the rest of the week. I'll see you until the next video. This is FX Big Dog saying cheers.